$244 billion. That's Apple's cash pile, bigger than Costco, the entire company. Let that land for a second. A phone maker, sitting on more idle money than America's third largest retailer is worth on a good day. Goldman Sachs, smaller. Morgan Stanley, smaller. Nike, roughly tied. Apple isn't a hardware company anymore. It's a sovereign-scale bond portfolio, with an iPhone factory bolted on. Rewind to 2011. Tim Cook takes over from Steve Jobs. Apple is already a cash machine, but Jobs hoarded it. No dividend, no buybacks. Cook flips that. 2012. The first dividend in 17 years. The first buyback authorization. Then the engine kicks in. The iPhone goes global. Services launches. Free cash flow climbs from $60 billion a year to $80, to over $100 billion by 2022. Math problem. Apple is generating money faster than it can give it away. Across 14 years, Cook returned more than $900 billion to shareholders, dividends plus buybacks combined. And here's the punchline. After all of that, the pile got bigger, $244 billion. Still sitting there, Q1 2026. The cash didn't shrink. The company just out-earned its own ability to spend it. So what's actually inside $244 billion? Crack open Apple's 10Q. Cash and equivalents, $33 billion. Short-term marketable securities, $36 billion. Long-term marketable securities, $175 billion. That last bucket is where things get interesting. Pull the footnote, Note 4, Financial Instruments. U.S. Treasury securities, roughly $80 billion. U.S. government agency paper, $15 billion. Corporate debt, all A-rated or higher per Apple's own investment policy, another $80 billion. Mortgage-backed and asset-backed securities, $12 billion. Non-U.S. sovereign debt, $10 billion. Municipal bonds, money market funds, commercial paper. Read that list again. That's not a corporate treasury, that's a fixed income hedge fund. Average duration on the portfolio, roughly 3 years. Yield in about 4.5% in Q1 2026. The math, $11 billion a year in interest income. From doing nothing. Warren Buffett, 2018, quote, "It's effectively a giant savings account run by a phone company." He wasn't joking, he was reading the balance sheet. Now zoom out. Apple owns $80 billion in US Treasury debt. $80 billion. That's not a corporate footnote, that's a geopolitical line item. The US Treasury publishes a monthly report called TIC, Treasury International Capital. It lists who owns American government debt, country by country. Run Apple against that list. Norway, the country with the world's largest sovereign wealth fund, holds about $58 billion in direct US treasuries. Apple beats Norway by $22 billion. Mexico, $63 billion. Apple wins. Sweden, $43 billion. Apple nearly doubles it. 5 OECD countries' direct treasury reserves lose to 1 Cupertino balance sheet. Why does Apple buy them? 2 reasons. Safety. Treasuries are the closest thing to risk-free that exists. And yield, 4+% on $80 billion, is roughly $3.5 billion a year. From sitting still, the Federal Reserve raises rates. Apple's interest income climbs. The Fed cuts, it falls. Apple is now sensitive to monetary policy. The way a bank is, not the way a phone company should be. Tim Cook, 2018 earnings call, quote, "Our goal is to be net cash neutral over time." Translation, distribute the whole pile. 8 years later, it's still here. Then there's the buyback engine. Since 2012, Apple has spent roughly $700 billion buying back its own stock. $700 billion. Pace, $75 to $90 billion a year. Every quarter, roughly $25 billion vanishes off the float. The share count tells the story better than the dollar number. 2012, split adjusted, 26.5 billion shares outstanding. Q1 2026, 15 billion. Apple bought back 43% of itself, almost half the company, gone, repurchased, retired. May 2024, board authorizes another $110 billion. Cumulative authorization now north of $815 billion. And here's the kicker. Even after all of that, the cash pile hasn't drained. Free cash flow refills it faster than the buyback empties it. The interest income alone, $11 billion a year, exceeds Spotify's total quarterly revenue. One wrinkle: most of this pile didn't start in California, it started in Ireland. Pre-2017, Apple ran a structure called the Double Irish, $250 billion at peak parked offshore at near zero tax. August 2016, the European Commission rules it illegal state aid, orders Apple to pay back €13 billion. Margrethe Vestager, the EU Commissioner, quote, "This is not a penalty, it is unpaid tax." Apple appeals. Lower EU court sides with Apple in 2020. Then September 10, 2024, the European Court of Justice reverses everything. Apple liable, pays €14.3 billion with interest. Same year, 2017, the US Tax Cuts and Jobs Act forces repatriation. Apple writes another $38 billion check to the IRS. The cash comes home. So what is Apple really? Strip away the keynotes, strip away the marketing. Look at the balance sheet cold. $244 billion in cash and securities, $80 billion in treasuries, $11 billion a year in interest income, more than Twitter's entire revenue. Apple isn't a phone company with a treasury department, it's a treasury department with a phone division. Next on the hidden ledger, we go pick between two threads. Thread 1, Costco's $4.99 hot dog, the loss leader that's defied inflation for 40 years. Thread 2, Berkshire Hathaway's $300 billion cash position, bigger than Apple's. Comment which one you want first. Subscribe. Every week, one more hidden ledger.